Hi everyone and welcome to another live trading series. It is 12:30 on April 20th. I'm doing some trades. I had a few trades planned for you this morning, but then the market went the opposite way of what I wanted. So I had to scrap it and come up with a new idea. So because people have been asking, they didn't fully understand the cash secured put in a TFSA video that I did a few weeks ago or maybe a few months ago. So I'll try to do it again and explain it again. And I'll also show you, maybe I'll do a Tesla earnings play and I'll just show you what I've been doing on Tesla. I know I trade a lot on Tesla. It might get annoying, but because I'm doing spreads, you only need $10,000 in collateral. So it might be a little more relevant to people who have at least $10,000 and level 3 available. So I'll start with the in the money covered call equals a out the money cash secured put. So if you have a tax-free savings account and you want to sell a put, but you can't because that's level 4 and it's banned, you're only allowed to do level 2, which is max covered calls. So level 1 is buying a call and buying a put. That's level 1. Level 2 is selling covered calls. So you have to have the shares in order to sell. So what I'm going to do here is show you that it is essentially the same. If you sell an in the money covered call at 43 for TQQ, or you sell an out of the money put at 43, you'll end up in the same position. This is just some minor friction. So right now, TQQQ is 48. So I would need to buy at 48 and then sell an in the money covered call. The premium is 590 in order to do this. So I'll be making 590 here, but keep in mind, I'll be losing $5 a share here. So I bought it at 48. I have to sell at 43, but I'm losing 5 here, but then I'm making 590. So net credit should be 90 here. And then out of the money cash secured put or out of the money put, the premium is pretty simple. You just get $1. So I should end up net the same scenario. So let me do, where's the percentage button? Percentage. So hopefully if I could bring this up to like 0.95 and I can bring the variance between these closer, but you'll end up in the same position. If TQQQ goes down below 43, in both scenarios, you'll end up owning the shares. If TQQQ is above 43 by my expiration date, in both scenarios, you'll end up losing the shares. I bought at 48 and I'm selling at 43. If it ends up being 43.01, both scenarios, I lose the shares here. I don't have shares here. Same position. If it's 42.99, I have the shares here and I'm forced to buy the shares here. So you're in the same position. In theory, in the money covered call and out the money cash secured put or out the money put is the same thing, minus some friction between the spread. So let's go play around and just see what everything's at right now. If you're like me, the whole market is kind of tanking. I'm pretty unhappy. Hopefully you didn't sell puts on Netflix because you would have lost. I can't believe it's down 35% in one day. I thought it would be like 20%. If you've looked at Netflix's last few earnings, they've missed and they've gone down a lot. But let's look at TQQQ. I'm going to do a short-term trade, only 10 days. So I have it lined up here. Instead of April 22nd, which is 2 days away, I'll do April 29th. So this is like a 9-day play. I'm going to sell the 43. So where is it? 43. Okay, so it's changed since I set this up. So 6, 10, and then 90. So let's go 6, 10, and 90. Okay, hopefully I can bring this variance. Okay, yeah, the variance switched. What I'm going to do, because this is in my tax-free savings account, I have a lot of cash just sitting around because I'm afraid and I don't know what to do. The market hasn't given me a clear direction. Is it going up? Is it going down? Like with AMD, it went from 105 to 125 to 95 within 4 weeks. Like I was used to selling strangles on AMD, but like I need like pick a direction. It's going up or down 30%. I just can't predict. I just don't know what to do. So I'll do like a short-term trade. I'm buying 300 shares and I am selling them at the 43 strike. So in Quest Trade, you can sell a direct covered call. But if you already have the shares, you could just skip this process and you just be selling. But I am buying them at 48.22 and I will be selling them at 43. So my return should be 2-ish%. So if I go, where is it? This is here. So it'd be 48.22. Okay, that's why it brings it down a little closer. So my return for 10 days is 2%. TQQQ is a little more risky. So you get a little bit more premium, but hopefully I can do a short-term trade. My goal is to lose the shares. I don't want to own them. I just want to do something short just to make some premium, just hopefully make a video for you guys that you can learn. So I'll try to reduce. So when it says debit, that's how much you're paying. I'm going to try to reduce this debit. So it will cost me $12,639, but I will make 43 times 300. I should make 12,900 when they finally get called away. I think that's the proper math. Let me sell this here. Yeah, so I'm only making $300. That's not very good, but I have no other trades and I want to make a video. Let me do that so it gets filled right away. Let's see what it looks like. Strategy. So there is my covered call. In the money covered call, making a decent premium. So this times 300, $264. It's not a lot. It's not a lot. Let me move on to Tesla. So if we go Tesla, and I'll just show you what's happening here. So if we open up this vertical put, so this is one earnings play I have. I sold the 870, 770 put. This is a vertical put. That means if it goes below 870, I'll be forced to buy 100 shares. If it goes below 770, I'd have my max loss of $10,000. Max loss is, oh, I closed my calculator. Max loss, because this is 100 strikes wide and it's 100 shares. 100 times 100 is $10,000. So I'm making $450 in 2 days, risking $10,000. If Tesla stays above 870, which I hope it does, it's kind of dropping right now. A hard 4% drop. So earnings are after the market. So this video will come out after earnings, so you'll see if I made money or I lost. But I'm going to try something maybe a little riskier. So let's go back to Tesla. Let's do a vertical call. I want to make money on both sides pretty much. So I will be selling the 1100, selling the 1100, and then buying the 1200 as protection. So another $10,000. But I should be making slightly more. So this is 8% return in 10 days if I end up being 100% profitable. But I'll try to maybe close it a little early. So let's move this up a little. If I can make a little bit more. So this will pay me $1,650 for now. But I'll try to close it at $800 or $1,000 profit. I'm trying not to make 100% profit. After earnings, this, I should, volatility will drop. I should make a decent amount, but let's see. Let's see what happens. I will close this for now, sell this. So it's another 1,600. See, if I was able to do this in my TFSA, I'd be making 1,600 tax-free, but I can't. So what can you do? See, what's frustrating, I don't know why it's not turning it into a Iron Condor, or maybe because they're different dates. So this is 9 days away. Hopefully I can close this tomorrow or after tomorrow. I know I sold it for 9 days, but with an earnings play, I try to do something short term. Today is April 20th and their earnings are after the market. Is there anything else I want to show? Other than I'm losing money on my NVIDIA poor man's covered call. I'm down $12,000 because my timing is poor. I should be able to film some videos, maybe next week, rolling these square puts. So I sold 7 square puts at 110. It's kind of been hovering. I'm only up $500 on 2,500 total. Maybe I can roll them down or maybe reduce the contract size. Is there anything else? Not really. My Apple Poor Man's Covered Call has been doing well. And then obviously the Leap is doing well. But I think Tesla is like, I'm making the most on Tesla. I'm up like $35,000 on this. But yeah, maybe I'll film a video maybe next week updating everyone on the Poor Man's Covered Call for Tesla. So I ended up selling. I do too much Tesla content. So I don't know. This, I'm just going to let it expire. I bought this as a previous spread, but I closed the short side. I just kept the long side in case it made money, but it didn't. So I'll just keep this. But this 875 call should be paired with my 300 call. So I'm doing a Poor Man's Covered Call. Right now it's in the money and I do have to manage it. I've been rolling it up like 25 strikes for 30 days. So I'll roll this up from 875 to 900 and probably add 30 days. And then it'll probably bring me to a break even in terms of buying this at a loss and then selling my new call at a gain. But yeah, I think I'm going to end it here because I'm kind of all over the place. If you're interested in selling cash secured puts in your tax-free savings account, consider selling an in-the-money covered call. If you have any more questions, let me know. Ooh, I forgot to plug my Discord. If you're interested in joining the Discord, there are 27 members, I believe. It's only $5 a month. Consider joining the Discord. Let me know if you have any questions. Thanks for watching and tune into the next one.